Oh, here we go. Now it's working. Hey, everyone. Welcome to another episode of Bitcoin Law Review with your host, Tone Vays. Had a little bit of technical difficulties getting the live stream to work. That was weird. But we are back. This will be a great panel. I'm not sure how many lawyers are going to be joining us eventually as the show goes on. But for now, we will begin with this will be a great panel. Oh, that was on your end, I guess. But for now, we will just start with Bill Restis of Restis Law Firm out in California, and we will bring other people on as they show up. Bill, how are you, man? It's been about a month since we did this show.
Yeah, I know. I really miss doing this. We used to have the regular show during the ICO heydays of 2017 when everybody was, 2018 when everybody was wondering whether ICOs were securities or not. Hi, everybody. Bill Restis.
Yeah, we're still wondering, right? Like, we're going to talk about this on the show, but like, I haven't been wondering since 2017, but people still are wondering if ICOs are securities, and I can't wait to talk about that topic.
Yeah, I mean, it's a funny thing. Everybody in the industry keeps saying, well, we want guidance, but I think we've got some pretty clear guidance at this point. And we'll talk about that,
I can't wait. We're going to get to that. We're going to talk about a couple of other stories. What's going on in your world, man? How are any of your litigation cases going? Are you still involved in the Tezos thing? Because there was a switch of the lead plaintiff.
Yeah, so I'm still involved in the Tezos case. What happened there was the lead plaintiff had to withdraw, and because of a very specific statute that applies only to U.S. securities class actions, the court decided that they should switch up the lead plaintiff to someone else who had previously applied at the beginning of the case. And so there is a new lead plaintiff, but a lot of the counsel is the same. We have a new co-lead counsel, Joel Fleming from Block & Levitin, a very fine attorney in the security space. So that's still going, still on the team, but I was never in charge in the first place, which is, sometimes that's comforting to let somebody else be the lightning rod.
Hey Bill, can you? Oh yeah. Sorry guys, apparently I was using the wrong mic. Hey, well, what was the? Can you clarify on the U.S. security statute that caused this mess?
Right. So this is a really wonky statute that only applies to securities class actions. It's called the Private Securities Litigation Reform Act. And what that effectively does is that when you file a securities class action in the United States, there's particular rules for how the litigation who controls the litigation, who's going to be the lead plaintiff of the case and who's going to be the lead counsel. Normally in class actions, there's a rule that the first to file the lawsuit controls the litigation, and all other cases that come after that have to be in deference to the first case. But in securities cases, Congress determined that the biggest investor with the largest stake in the litigation should control the case because they have the most at stake. And so it incentivizes the plaintiff to adequately represent the class. So how that plays out in a typical securities case is somebody files the lawsuit, and then there's a notice period where the original case files something called a PSLRA notice, and it tells the whole world that the case is pending. My firm and another firm out in New Jersey, very talented firm I work with a lot called Light DePalma Greenberg. We filed the first PSLRA Tezos case up in the Northern District of California. Our firm sent out the 60-day notice. And then at the end of the 60 days, people have a chance to apply to become lead plaintiff. And so at the last minute, on the 60th day, everybody files their motions for lead plaintiff, and the court chooses them based on the largest financial stake in the litigation of the people who have applied to be lead plaintiff. So what happened was in Tezos, we had about 5 or 6 original applicants to be lead plaintiff. And when the lead plaintiff who was originally appointed had to withdraw, the court said, you know what, we're not going to select from somebody who you chose, because that person didn't apply during the additional 60-day period. So the court decided it needed to choose the next biggest stakeholder, and that was the party who was appointed. And you'll see on the screen that says Trigon Trading. So it's just the way securities class actions proceed, and I think sometimes there's unintended consequences. You know, in this case, it was in the middle of the lawsuit where we had to change the plaintiff. The PSLRA selection process normally happens at the beginning of the litigation. So there was just a lot of interesting things that I probably won't go into because I'm part of the case. But, you know, from a 30,000-foot perspective, that's what happened.
Right. So just two very quick follow-up because I do want to move on. What do you know about Trigon Trading? What is it?
You know, that's something I can't comment on. They are a investor that has one of the largest stakes in the litigation. And beyond that, they weren't my client, so I don't know a ton about them. Gotcha.
Okay, I'll have to look them up because I'm not familiar with them at all. Sounds like a crypto hedge fund, and I've already have a crypto scam episode on crypto hedge funds. But my other question is, I always get Tezos and Tron confused. What exactly is Tezos?
Well, Tezos is they call it the self-amending cryptographic ledger, right? So it was supposed to solve some of the problems that Bitcoin that were created by the Bitcoin governance model. And but again, the Tezos litigation is not about, you know, how good Tezos is as a protocol or how bad it is. It's really about whether the initial ICO was an offering of securities that must be governed by the securities laws. And I'll leave it at that because again, I'm not lead counsel, and we have new lead counsel who I think should be the ones that speak about the case.
Gotcha. But is the token like actively traded now? Did it ever launch?
Yeah, it's launched.
Okay, I'm looking at CoinMarketCap. I'm just curious. I'm like doing a Control F on Tezos and it's just not showing up. Maybe it is now. There it is. Oh yeah, it is. Number 15 under ZTZ. It's at the moment, I'm not gonna screen share this, but I'm just curious. So at the moment it is trading at $1.22. And in terms of US dollars, it peaked in price at $11 in December of 2017 when every ICO pumped, had a secondary high of $5.36, and currently trading at $1.22. You don't remember what the ICO price, initial sale price was, do you?
No, it was priced in Bitcoin. You had an opportunity to submit Ethereum or Bitcoin. Anyone who submitted or who invested Bitcoin, it was at a fixed exchange rate throughout the ICO period. Anyone who invested Ethereum, it was sort of a floating exchange rate because as soon as someone invested in the ICO, it was converted to Bitcoin.
Gotcha. Well, in case anyone's curious what Tezos is, developed by ex-Morgan Stanley analyst Arthur Brightman, Tezos is a multi-purpose platform that supports dApps and smart contracts. It aims to combine a self-correcting protocol and on-chain governance to manage network modification. This is, of course, all bullshit, in my opinion. Tezos is powered by XTZ, a totally unnecessary token, which is created through baking. Nice. Bakers, I mean, they just make up terms, right? After the Ethereum made up gas. Bakers put up deposits and are rewarded for signing, publishing blocks, witnesses. Oh God, it's a delegated proof of stake. So that means they're just copying Dan Larimer scams, and supports Turing complete smart contracts. Of course it does. Implementing OCaml programming language. That one I'm not familiar with. Which is set to, this is just nonsense. Okay, cool. All right, let's move on to something a little more interesting. hopefully the Tezos will know it will be deemed a security, and it will help to identify everything else on CoinMarketCap between number 2 and number 3022. All right, let's go over to another article that you wrote as I'm waiting for other lawyers to join. And I thought this was interesting. Are 51% attacks illegal? So why don't you give us the background, and then we will dig into this a little bit.
Yeah, so one of the things that I really enjoy doing as a lawyer is to try to see, to analyze things that are happening at the edge of the law and see if any laws apply to whatever conduct we're looking at. And for me, one of the interesting questions I had was about the security of Bitcoin. I have I have an affinity for Bitcoin. I tend to think that it is, the standard bearer, and I follow a lot of your opinions about it. So one of the things that occupied my thought process was the chief vulnerability of the proof of work blockchain seems to be a 51 attack, right? So, was this something that might happen by a state actor? Is this something that might happen by, somebody in their mom's basement somewhere? And would this cause a lot of damage to, a proof of work blockchain? And I think we all know that this seems to be one of the chief vulnerabilities of proof of work blockchains. So I wanted to take a look at it, and I said, is there any way if someone were to hack, do a 51 attack on Bitcoin, whether a government entity could punish the attacker, or could someone, let's say, and I do class actions very frequently, could, for example, the Bitcoin community be a class of investors that lost money as a result of the 51 attack? So one thing I took a look at, and of course we had the ETH Classic attack that happened in January. I know there was another one. I think it was Vertcoin.
It was Verge, but Verge had like 3 of them, but all of the Verge crazies are continuing to deny the fact that it ever happened.
Right, but if you look at the trading price after these attacks, there was real losses by the community, right? So, for example, Verge, and I'm going back to my research on this, it lost something like 15% of its value in 24 hours. ETH lost about 10% of its value in the short term period after the 51 attacks. So that's really where this came from. And so there's a little used and little known statute in the United States called the Computer Fraud Abuse Act. And that's what I think provides teeth to potentially make 51 attacks illegal. So the Computer Fraud and Abuse Act is this hacking statute that was enacted in the 1980s, and basically it provides penalties for hacking into computers and destroying data. It's been used, there's different acts that are considered illegal under the CFAA, but there was one provision of the CFAA that deals with accessing a computer without authorization and causing damage to the information on the computer. So I said, this is an interesting statute that might apply. So this article sort of walks through the elements that you need to prove to substantiate a CFAA violation, and it looks like that a 51% attack fits this statute like a glove. And so you basically have a blockchain, and all the networks working on a blockchain are the type of computers that are protected by the CFAA. If an attacker transmits information to that blockchain, that seems to be fit right into the statute. Then there is damage to the blockchain and the information on the blockchain. There's some issue whether that might apply. And then the big one is whether 51 attack would damage the information on the blockchain. And so obviously a 51 attack has issues like you have a double spend, or you have transactions that did occur that don't show up on the blockchain, or transactions that didn't occur that do show up on the blockchain. And this corruption of information seems to be the type of stuff that the CFA addresses. So what's really interesting about this is that it's a criminal statute. So the Department of Justice could come after an attacker. They could cause them to forfeit their computers, to forfeit the proceeds. There's prison sentences up to 10 years. There's large monetary fines, and anyone who lost money as a result of this, a 51 attack, could potentially sue. And I think this could be the basis for an investor class action. You know, theoretically, I don't think that it's actually, you know, would be a really good case, because, you know, let's use Bitcoin as an example, and $50 billion gets knocked off of the value of the Bitcoin blockchain. Little hard to sue somebody in their basement, some hacker, talented hacker, please don't come after me, some talented hacker, you know, for $50 billion. They probably don't have that. But the criminal penalties here might make the blockchain more secure, because if this type of information, you know, filters out into the community and to law enforcement officials, there might be some second thoughts before attackers go after any particular blockchain, and it might make the ecosystem more safe and secure for everybody who uses it. So that's why I wrote that article, and that was, I know that was a mouthful, but I'll shut up now and see if you want a word in it.
Yeah. So yeah, a few of my thoughts on this. So my first question is, why do you think that, I mean, a blockchain is not a single computer, and this law sounds like it was kind of made for either a single person's computer or a computer network inside a corporation or inside an entity. But a blockchain is a decentralized network of nodes. So I'm not sure if the word computer would actually apply, because a blockchain isn't one entity.
Right. So a protected computer can be one computer, or it can be a network of computers that are tied together, right? And other courts have looked at this and said a computer that is on the internet or connected to the internet and transmits information to the internet could be a protected computer. So if one computer on, let's say, proof of work blockchain that's running the software client is a protected computer, I think the network of every set of computers together would satisfy that. But again, this is me just taking a look at a fact pattern and seeing if the law applies, right? So every blockchain is going to be different. ETH and ETH Classic is going to be different than Bitcoin. Verge is different than Bitcoin in terms of the mechanics of how everything works. So you'd have to go through each blockchain individually and see if it fits. But you know, if we're talking really broad strokes, I think that you have a reasonable basis to think that it might apply.
Yeah, my other view on this. So obviously, I mean, if Bitcoin does get 51% attacked, I mean, the value of every single blockchain just goes to zero. There'll be no money to sue for. So obviously, this is mostly theoretical, and you're going to have a very hard time finding that person to sue. And the other issue is the most likely candidate to 51% attack Bitcoin would be governments themselves, not a private entity. So that's that's kind of like
all true. All true. I agree with all of that. But you know what? I think one of the reasons, though, you know, I do these exercises is because we constantly think in the crypto community that we need to come up with new laws and new regulation to govern this stuff, and I don't think that that's always the case. You know, obviously, distributed ledgers create new permutations. But as they, you know, I think it said in the Bible, there's nothing new under the sun. And people have been doing the same thing for generations, and even though you have a new permutation of technology, the same underlying concepts can apply. So, because I don't think we need a lot of new regulation to govern the blockchain space. I mean, I prefer to just let this play out, let the technology develop, and let's wait 5 or 10 years and see before we start, putting these things in boxes that may not fit as it grows.
Yeah, my final comment on this is the last statement that you said in your initial explanation of this, where you said this might, make blockchain a little more secure because some of the 51% attackers may be hesitant to do it because of potential legal action. I think it's completely the other way around. I think what makes the blockchain stronger is the ability to not to be able to have a 51% attack. So I want to see more 51% attacks. I want all of them to be attacked because I know they can be attacked, including Ethereum and even Ripple and Litecoin. All of them are very susceptible to 51% attacks. And Monero, especially Monero, from what I've been reading recently. And I want to see that happen because people need to understand why Bitcoin is I want to say why Bitcoin is not at risk of a 51% attack, but that's not true. Everything is at risk of a 51% attack, but Bitcoin has a very tiny risk of a 51% attack, while everything else has a very high risk of a 51% attack. So the more 51% attacks that we are actually seeing in the system, the more confidence people will have in Bitcoin, and not the other way around, as some Bitcoin haters like to try to convince the world to sell their shitcoin.
I think that's true. The only way we're going to have these systems endure is if they are attacked and if they successfully resist the attack. One of the things you said earlier about once a network is 51 attacked, it should go to 0. And I tend to agree with that. And I'm surprised when I looked into it that the actual losses, for example, in ETH Classic or Verge, were only, Verge was about a 15% loss as a result of this. It's still going. It still traded after that. ETH Classic did. It almost was something that didn't phase ETH Classic very much. And
no, that's because people are stupid. I mean, that's
stupid, sure, but
I mean, it's for the same reasons Tezos is still trading at $1.22 when I was just informed in the live chat the initial IPO price was approximately 50 cents. ICO price. Like the project is clearly ridiculous and going through a class action lawsuit showing you that it's centralized. Meanwhile, people are still buying it, and it's always been worth more than the initial ICO price. Like, it's the same reason why Verge and Ethereum Classic and all those other ones that got 51% attacked, why they still have value. I think Next is pretty much done, and some of the other ones are, but the majority 51% attacked coins, they're still kicking.
Fascinating, isn't it? Right? Because if something is able to be 51% attacked and it calls into question the integrity of the blockchain and the integrity of the data on the blockchain, what is it really worth? Not much in my perspective.
Well, they're worth nothing. We got another visitor coming in. They're worth nothing, but this is why I continue to fight this war on shitcoins. All right, perfect timing. Hold on a second. Let me stop screen share for a second. Mr. Silver, unmute and join us.
Welcome. Hello, people. Apologize for being late.
Hey, David.
Lunch.
Hey, it's all good. Hey,
early happy hour starts in 30 minutes.
Hey, David, you're going to love this one, right? So about like 20 minutes ago, someone in the live chat said, I just joined. What did I miss? Who's Dave suing now?
I've been spending my days right now resolving cases. Next week, we go back to filing cases. I gotta settle a couple of cases to make sure that, the world knows stealing money in crypto is a bad thing.
All right. Now that we got a second lawyer joining us,
I know I've been the only one talking here.
Yeah. Now we're gonna move on to the real stories. But since we just discussed a couple of things. So we talked about the Tezos, one of your favorite projects, David. Anything you want to say on Tezo since you're not part of the case?
It's kind of funny that, I know Bill's part of the team representing them, but the lead plaintiff who stepped out, I had an original beef with the lead plaintiff before he was selected. And my original beef with the lead plaintiff was that he worked at Perkins Coie, I believe, when he filed the lawsuit initially. And it was always ironic to me that Perkins has now become one of the leading plaintiff crypto law firms in the country, despite creating this entire mess. Between Perkins and Cooley, they basically created this mess of 2016 to 2018. And now Perkins is filing lawsuits left and right. They're the ones who actually filed, they filed one of the New York lawsuits. They're tangentially involved in one of the Florida litigations now. So I think it's funny these big law firms who created the mess are now charging their clients hourly to clean it up.
Wow.
Interesting business model.
It's a damn good model if you can get the clients. You wouldn't have to hire the strip mall lawyer David Silver, to handle these cases. Jake, how do you pronounce Jake's last name? Jake's name on Twitter, the Cobra Kim lawyer.
Oh, I don't know.
Hold on. Jake, what's your last name? Jake Travinsky at Cobra Kim. He's got a decent following on Twitter. He's been ranting the last couple of days, but he was pointing out that people call me on a daily basis asking me why I haven't sued every single ICO. And the answer is simple. We need to get to the point where collectability is a possibility. And a lot of these, I spoke to someone today who called up and they invested $500. They feel they're out $5,000 after 3 months, and they want to file a class action. And it's hard. These class actions are expensive. These class actions are not easy to do, and they tend to be prolonged. So it takes a lot of time and energy and effort to do them, and resources. So we got to pick and choose good ones. Bill's got a good one in Tezo still. I've got $1 billion one against BitConnect, which gets better every day. Hopefully the court in Florida soon rules that Google and YouTube are on the hook for this, and that they have to stay in the case. But we're going to see, it's lots of lawsuits doing good things.
Wow, that's going to be interesting with Google and I said Google and YouTube or Facebook?
Well, currently it's against YouTube, but Google's right. I mean, Google owns YouTube.
Oh, Google owns them. Yeah. So it's just still the same entity.
But they've made claims that they say they're immune, and truthfully, I don't believe it. I filed in good faith, not believing it, and we're going to see what happens, because if YouTube is found to be on the hook for the analytics of advertising and partnering with the promoters, it's going to be an interesting round, because suddenly a lot of these lawsuits are going to have a lot more value based on who promoted what and how they were advertising it.
Right. So we're going to have to talk about this later, because I got two problems with this. One, David, if you get my YouTube channel shut down, I will never forgive you. And two, like, to be honest with you, I don't want anyone who invested in BitConnect get any kind of money back. I mean, lessons have to be learned.
We have a difference of opinion on that one. And so I can tell you right now, my wife really disagrees with you with no legal training, just on the presumption that we're not going to make any money back if that happens.
Here's the thing, right? I'm sorry, I'm kind of invested in Google stock, and if that shit drops like 5%, because they have to pay out all of the bullshit of BitConnect, that's going to be your fault, David.
I'm prepared to accept that responsibility and burden on my shoulders. I don't even think if they paid out the BitConnect lawsuit, their stock would be impacted. Don't worry about it.
Well, it's an interesting theory, right? To say that YouTube and Google should be, I think the theory was that they were promoters I'm curious, and this is just for my edification, or maybe you don't want to talk about it because it's your case, David, but what's the hook? How are they on the hook?
See, this is the difference between Bill, who splits his time, sometimes being a plaintiff's lawyer, sometimes being a defense lawyer. I love talking about my cases. I never say no. Why in the world wouldn't I talk about what's going on in the court? The hook is that the Communications Decency Act says that online providers are immune from responsibility for what's published on their websites. So Google, for instance, has been sued in relationship to terrorist plots, for instance, where the bomber says they got their information on YouTube somewhere, like they learned to build a bomb on YouTube. And Congress, because of very good lobbying, agreed and basically allowed the immunity statute to say that as long as internet service providers do not have anything to do with what's being published, and they allow everything to be published, then they are immune. Well, what happens on YouTube, and Tone can speak to this, they are the YouTube promoters, and in the lawsuit, we show the staggering numbers some of these guys had. 700,000 followers, million views, like each video was getting 1 million views. The partnership program between YouTube and the people who have YouTube channels on that level is literally called the YouTube Partnership Program, where the YouTube promoters are partners with Google. And it always makes me laugh when defendants have to say, you have to look past what we actually say. We are not actually partners. So even though we call ourselves partners, legally we are not. But the more stature you get in YouTube, the more review process that you face for what's published. And we don't believe that what's being published is simply what these people wanted. There's a higher review standard. There's also a claim in there for a duty for failure to warn. And I got to look at my little cheat sheet. Where's Nevada? Nevada's in the Ninth Circuit. The Ninth Circuit has a case that specifically says a claim for a duty for failure to warn is outside the Communications Decency Act. Obviously, Google disputes that, but we'll see. You know, the case is fully briefed. It's been fully briefed for a couple of months. Hopefully, they rule on it soon, because if it happens and I have to get $1 billion from Google, I'm telling you, man, I'm doing that the show after I get that check clears my escrow account. I'm gonna be in a four bed, 4-bath ski out chalet in Vail.
He's going to have that big Bitcoin golden necklace like the 90s rappers.
I
saw some rapper yesterday. I'm with you, definitely.
Hey, maybe you can buy Ronnie's apartment. That was
What's happened? I haven't seen an update on that case in a couple of months. I know the lawyers withdrew. Is there some news on that one?
No, I don't know. I've been dealing with my own similar case, with my own similar issue to keep up with that one. All right, hey guys, I do want to get to. I don't know how long we'll have Silver, but wish Drew can join us because he really broke this down. But I do want to get to the meat of the stories. Otherwise, we will have to do the show again next week, which I wouldn't mind because it's a great show. But we did get a little bit of additional clarity, not an official ruling, of course, from the SEC on what it is to be an investment contract, aka a security. And I initially read this and I'm like, well, this doesn't really say anything. But then apparently there was a much longer thing here on what it is. And basically, because everyone in crypto is a child and doesn't know what a Howey test is, the SEC has spelled it out for them in as much plain English as they could. So once again, those that have been watching this show for a while should be very familiar with the Howey test. But basically, this was just an explanation to the crypto community on what the Howey test is. So let me quickly summarize. The Howey test is in 3 parts. One is an investment of money, but money doesn't actually have to be physical fiat money. It could be any digital asset or basically anything of value, potentially including like your time spent. And this was that whole episode we did with Bruce Fenton, trying to explain to Bruce Fenton that people rerouting their mining hardware to mine Raven coin could be construed under the Howey test as an investment of money. The second part, you are investing this money in a common enterprise, though I would have loved to see a more, layman's version of what a common enterprise is, but basically it's a company or a group of people that are in charge. And then part C, after you've invested something of value that into something that could be considered a group of people or a company, you then have some kind of an expectation of profit from the efforts of people within that common enterprise. And this particular statement refers to them as active participants. So the active participants are the people that are doing something for your investment to be more valuable in the future. That defines an investment contract, which in effect breaks security law if you don't register as a security. If you guys want to comment on this, I mean, we can go into details on this all day. Drew broke this down very nicely. And man, I really want to break it down. Also, before you guys start, let's hear what Stephen Pally had to say on this topic, and it's great. So I'm going to play this. Hopefully, everybody can hear it. Let me know in the live chat if you can't hear it, and then we'll get the lawyer's take. You guys heard this, right? Oh, where's my audio? Hold on. Something's wrong. Yeah, that's correct. Okay, hold on. Maybe this will work. Oh man, what's going on? Let me restart this. I tested it earlier and it was working.
You got that.
Here we go. Got it. Nope. Or was that one of you guys? Damn, I can't get the audio on this to play now. It's weird. I don't know what's going on. Anyway, sorry, Pally. I can't get you on here, but he talked about this and there's a really good video. All of these videos are in the video description. So go ahead. David, why don't you go first on this one and then we'll go to Bill.
First, are Jason and Steven still fighting, or have they resolved and hugged it out?
I'm not sure, but Steven might join us on the show. I texted him the link. Jason pisses everybody off, whether you're a lawyer or a bum on the street. You're mad at Jason Cyber.
Yeah, I love Jason. He's like a sibling. You love your sibling. Sometimes you fight with your sibling. Then you got to hug it out and move on. I got to learn to take that in my own life. So, look, I said this on April 3rd when this came out. Nothing changed. This is exactly what the enforcement actions have been doing. They're applying old law to a new asset class, and for the moment, they didn't come out and say anything that everyone in the marketplace didn't already know. Pretty much, if you raise money as an ICO and this goes back to, let's do pre-network availability, post-network. They said you're a security. They said that it might evolve over time. Great. They said that at the end of the day, the only thing that really came out here is they seem to really like stable coins, and they want things that are where stable coins they view differently than investment ICO tokens.
That's not necessarily true. I was gonna get to this story a little bit later.
They walked it. This came out after that article was written, but they pretty much walked back and they basically, first of all, there are the stable coins that are government approved or have received government blessing. They seem to be saying stable coins are permissible, which kind of makes sense. If you truly have a stable coin that's asset backed dollar for dollar, that's not an investment token.
Well, right, because there's no expectation of profit of holding a stable coin. Exactly.
So it's kind of, they kind of are dipping their toe in the water of saying what is permissible. But there's the fight of what's going on in the SEC right now is, from my perspective, the United States and our laws evolve over time. the people who want to say, well, we need new laws for crypto are insane. It's just not going to happen. So yes, this is about an orange grove in the 1940s, 1930s. I don't really care about that. The fact is, it's fairly good law for people to say, are you raising money and what are you raising that money for? Do you believe that by raising this money, a common enterprise is going to run it and they're going to run it for profit? And the answer is yes. They didn't come out and they didn't do anything radical. They didn't change their position. They've been fairly consistent. And how do I say this without breaching attorney-client privilege? Let me say, I speak to the SEC on a weekly basis. They are going after lots of people in crypto. The defense bar is going to love when the SEC finally comes out and announces who's getting indicted with a joint task force between the SEC and DOJ, what they're getting indicted for. And it's all going to be for stuff that happened in 2015, 16, and 17. And what they're doing right now by this is to lay out that basically anything that's sold that has if someone's going to profit on, they are going to be held accountable. And that's
hey, David, any chance it's also 2014 because you just took Ethereum out of the discussion?
What was that?
Any chance it's also 2014 because you just took Ethereum out of the discussion?
No, they have very clearly said, I think with a wink and a nod, that the Ethereum pre-sale was the sale of a security. I don't think they're walking that one back.
No, but are they going to do anything about it is my question. It doesn't sound like they will, unfortunately.
Well, I disagree with you. I personally, I've said this publicly a lot. I have no inside knowledge of what Vitalik has done. I've never met Vitalik. I believe Vitalik is working with the US government, the Russian government, any government who wants to work with him to protect his billions of dollars. And he essentially has already come to what's an agreement with the government and about what's going to happen. And it's called the delayed prosecution agreement. And he'll acknowledge in a year or two, the government will say he's been working with us and here's a $10 million fine. He'll pay his $10 million fine and go away and be happy.
Yeah, he's not going to do very well in prison.
Well, he's going to pay a fine, but he'll be fine. Don't worry about what's going to happen to Vitalik. He's got some of the best lawyers in the United States working for him. He's got a couple of my old friends working for him. He's going to be just fine paying a fine that will not even dent his net worth on a given day.
All right. Anything else you want to say before we go over to Bill? But then I have a couple of specific follow-ups on this.
Nope, go Bill. Let's hear his thoughts.
No, I think David's right on the money. I mean, if I can summarize what it said is that if you conducted an ICO, it was an offering and sale of securities, period. It's hard to have any ICO that took place, 2016, 2017, that doesn't fit within this definition of a security. One of the interesting things, Tone, that if you can go back to the summary where the SEC had the framework. So if you go down to the middle of this.
Which section? I read it all. It was I mean, there was almost nothing. There was a couple of things that I didn't like, but very few.
Right. So go down to section C, C1, and right before you get to C2, there you go. This paragraph right above it says in evaluating. It starts with in evaluating whether a digital asset.
Got it. Oh, no, it's section B. Hold on.
Google one more.
There, got it.
So what this talks about, there's two sections in here that talk about what happens after the ICO, right? And I've said this on this show many times, and I don't know whether the SEC agrees with me or not, but I think conceptually it's valid, is that we know for sure that the offering and sale of digital tokens constitutes an investment contract, which is the security. The tokens themselves don't necessarily have to be a security. So one thing that this framework set out is that there is a possibility that after the offering and sale has taken place, that the token itself can become sufficiently distributed and that you don't have the ICO founders controlling the network anymore. They're not in charge, so to speak, and it's sufficiently decentralized that the SEC, excuse me, and the courts can make a distinction between the sale of the token and the token itself. Because here's the problem. If you have an ICO and the tokens themselves are forever a security, that creates issues in the secondary market, right? Because an ICO, if you have the investment contract being if you have the ICO being the investment contract, that's one thing. If the token is the investment contract, that's another thing. So you have the offer creates obligations. And then if you have secondary trading on all of these crypto exchanges of ICO tokens, if the token is considered a security, that makes trading, it means that the token must be traded on either an exchange that fits the definition of the Exchange Act or a licensed broker dealer that is operating an ATS, an alternative trading system. So what the SEC was trying to do, I think, in this paragraph is to say that, okay, the offering and sale may have been a securities offering, and we need to make sure that that's the case so that investors can unwind their transaction, have the right to rescission, get their money back, get their Bitcoin back, get their Ethereum back, and not be stuck in these transactions. But if you bought the token, for example, on the secondary market, let's say you bought it on Kraken or Binance or whatever it is that a securities transaction? And I think what the SEC is trying to do here is to make it so that ICO tokens can be traded in the aftermarket if they're sufficiently decentralized, so that we don't have the securities laws applying to all of these tokens going forward. That was the biggest takeaway for me. Like David said, everything else is pretty standard. We've known this for at least a year, that the offering itself is an investment contract subject to the securities laws. Another thing that came out of this was...
Hold on, Bill, hold on 1 second on the next thing, because I want to zoom in on this thing a little bit more, because this is what Drew Hinkes referred to as the new section, because this kind of contradicts what Heinemann said in that original speech at Yahoo, because this gives it a little more clarity. And it's really, I found this section pretty interesting, where they're saying that if the token already, I mean, we're talking about Ethereum here, right? The question is Ethereum sufficiently decentralized now? And it says, well, to me, this read like, is the AP still a key element in the digital asset? And to me, the answer is a screaming yes. Vitalik is still in charge of Ethereum. And not only that, the recent announcement that Ethereum is building Ethereum 2.0, where the Ethereum token is going to be directly transferred to the Ethereum 2.0 token, should tell you everything you need to know that Ethereum is still a security. And Hyman's original statement, in my understanding of blockchains, Ethereum is not a security anymore. This flies in the face of that. Like the Ethereum 2.0 platform should fly in the face of that statement.
You know, I'm not going to comment on any particular project because I think that, and David's smiling over there as I say that, but the big picture here is that the SEC, and I think rightfully so, does not want ICO tokens and investors in ICO tokens to be stuck in this purgatory, this legal purgatory where they can't trade their tokens. Because the whole purpose of the securities laws is investor protection, right? So it makes sense to provide that investor protection for people who got into an offering, they bought into an ICO, and they want out. The token, for whatever reason, they want out. It's not necessarily help those same investors if they can't trade their tokens on the aftermarket because there are no crypto asset platforms that can trade them. So, I think that's what the SEC is trying to do, and I think it's a good policy choice.
I read it as the other way around, that the SEC doesn't want this stuff trading in the secondary market, because that was one of the that was one of the sections I read towards the end. That's how I understood it, and in that that was one of the provisions, and that was like basically saying that if it does go to that secondary market and people were actively trying to get it to that secondary market in order to give it more value by being on the secondary market, then it's a security. And also it goes, to me, when I read this, it read kind of like, okay, all of this digital crap is obviously securities, but how do we not, have like Delta Airlines and United Airlines and Amazon go after us for accusing their internal tokens for being securities? So to me, at the very end, it basically describes the fact why, Delta Airline miles and Amazon points are not securities, because they're traded only within their platform. You are not allowed to trade them on external exchanges, and their value is stable because you can only buy things through that platform, and you're not bringing them outside, and no one is holding an unreasonable amount of Amazon points in order to profit from Amazon points. To me, that's how I read it. All of the exceptions center around, are you airline miles?
So I'll jump in for a little bit on that, because that's always everyone. First of all, we have to segregate out crypto voices from the rest of the world. The rest of the world views crypto very differently than my Twitter feed. And the old school doesn't care about my Twitter feed. Bruce Fenton, who Bruce in real life is great. I like Bruce in real life. Bruce on Twitter is very different. The anarchists, the libertarians, those that shout down with government, that it's a different perspective. So what they're doing here is they're recognizing that, look, Bitcoin's now worth, how much? $100 billion, somewhere around there?
Sure.
Ethereum's worth somewhere, $15, $20 billion. These are real values now, but intrinsically to the U.S., intrinsically in the U.S. to the securities market, these aren't influential numbers. Now, if you believe my Twitter feed, they are going to surpass influential and take over the world. But until that happens right now, the SEC they are taking a new technology with a new base, and they're going to say, we're going to make the rules here, and we're going to make the rules that we like. And they're going to say, and people are going to come back to the Hinman speech. Well, it's a speech. It wasn't, actual law. It was him giving his perspective on something he didn't understand, that he has limited knowledge on. It's going to take 5 to 10 years for the government to catch up. All these bills that are being rushed through state houses, those are being rushed through state houses by lobbyists who have very specific things that they're looking for. This was very consistent. The SEC was very consistent in what they said, that if you are using this for something specific and, this is a usable product, great. But if you want to do this and create this and A, make it like money, or B, sell it on the secondary markets with no other value to it, we're going to make sure we're going to make that harder on you. And I expect it to become even harder in the next year or two. So the consistency of what they're doing, to me, is more important than the verbiage. They're being consistent in how they're framing the issues to keep the crypto assets under their watch. And Bill said this, whether he was trolling me on Twitter, when I was making fun of Jake this morning. The SEC's sole purpose is to protect investors. And, that's what they're trying to do. The fact that some people don't like that, well, that's their problem. The SEC is not going away. The American government's not going away. And at the end of the day, we should look for consistency. And this, the press release and the asset analysis is simply consistent with what the SEC has been saying for the last 2 years.
Right. And to me, again, like I said, I've read that thing. I read it pretty slow. I wanted to catch every single syllable in that statement. And here's how I read it. I think the only token besides Bitcoin that may avoid being called a security is Monero. Because even in Litecoin, Charlie Lee, even today, can still be considered an AP.
Agreed.
That's how I read it. Because as far as I know, no one knows who started Monero. Now, Fluffy Pony could be considered an AP, and that could be an issue, but at least he didn't start it. And it's also interesting that there were other cases. This is what we're not gonna get to everything. Like look at how many like people are like, Tone, you have so many tabs. I'm like, yeah, all of these are stories that we kind of need to discuss. And one of them was the Supreme Court ruling that a person making false statements, or a person, I guess, promoting false statements, even though that person didn't create false statements, is in violation.
And this is what I do for a living, and I'm thrilled by this. I couldn't be happier. But this is important in the context of what you were just talking about APs. Think about the Nano case and why the Nano case is so different than the other cases. Because there are people to go after in Nano who were identifiably making statements, who identifiably are profited off the technology. You know, this always goes back to, I hope Craig Wright, and I want to be clear to the listeners, I don't think Craig Wright is Satoshi, but I hope he's Satoshi. You know, if he actually moved something off the Genesis block and it could be held accountable and all this, great. You know, I think that's Vitalik's problem that is developing, that, and why I truly believe in my heart of hearts, he is working with the regulators already, because he's an identifiable person. He doesn't want to lose his extreme wealth. And the only way to do that is to work with the regulators. And we're going to see more and more of that with the consistency of what we see with the SEC, that all these people who think they're getting away with things, the people at top want to protect the wealth they've accumulated, and they're going to roll on everyone else.
I think a good way to look at this too, you both were talking about, you know, airline miles as an example of what is not a securities offering. I think one of the good ways for us to really drill down on this point is to look at the other item that was released by the SEC, and that was its no action letter against Turnkey Jet.
Yeah, no, I got that somewhere. Hold on, I got too many tabs. Here we go.
So basically what happened in this case, and this is where the SEC looked at a particular sale of tokens and said, no, this is not an investment contract that falls under the jurisdiction of the SEC and under the securities laws. And basically what happened was Turnkey Jet basically wanted to sell not miles, but a digital token that was worth $1 and would always be worth $1 that people could buy. They could sell it to consumers of their jet charter service, that I, as a consumer, can buy these tokens. They're worth $1. I can give them back to Turnkey in exchange for flying on the jets. There's not going to be a secondary market for them. They're not going to be traded, and hopefully someday my $1 Turnkey Jet token will be worth $2 or $4. And it's just a way for this jet charter business to find efficiencies in their business model. And what it allows them to do is to have people prepay for these tokens that they can be used on the platform. And one of the things that they were describing to the SEC was that it's a real problem for their business model. So let's say somebody wants to go charter a jet on a Saturday and the banks are closed. They can't wire funds to pay for their charter. And these tokens allow the participants in that system, whether it be Turnkey or it's brokers who are trying to schedule these flights, and it allows them to just transact their business better. So it's always a good thing to look at what a security is not. And right now we have not had any clear examples of what is not an ICO type offering that is not a security. And now we have one. And I think that is very helpful to members of the community. And if you look at that page, Tone, and for everybody who's watching, if you go down to the bottom of it, it has an incoming letter. Go all the way down, scroll down more. Right there, there's a link. So the no action letter doesn't tell us a lot about the actual platform that was being proposed to the SEC. But if you go down, this letter here, and from Turnkey Jet's attorneys, really describes in detail what they were planning to do and how it didn't fit into the rubric of the securities laws. And if you look at that and compare it to ICOs circa 2017, I think you can see a really big distinction, that none of the elements of what makes an investment contract an investment contract were present. And so I think that that's very helpful going forward.
We are a law show and there aren't a lot of us on today, but let's give mad props to my neighbor, James Prescott Curry, who I've never heard of, never met, didn't know he was in this space, probably charged his clients like $5,000 for this. He deserves all the work he's going to get moving forward for being the first guy to get the no action letter. But this is I'm sorry, you know him?
No, I don't, but I agree.
Yeah, I mean, this guy probably, if he'd give me $5,000 on this, I'd be shocked. Good for him. And this is the beauty of what's going on. Cooley probably charged clients $200,000-$300,000 a pop not to get a no action letter. This guy deserves mad props for what he did. Now, unfortunately, I think this letter is really good for guys like me in showing what is and is not going to be a security. There's so much good stuff in here that they put in writing that they wouldn't do, or they'd be in violation of the securities laws, that this actually is very good in proving, and again, consistent with what the SEC was saying of what they're going to do. You couldn't trade it before. They wouldn't use any money to build a network. No money was going to come out to pay people. I mean, it was great that the only thing the token was for use, effectively turning these tokens into airline miles, which is why they got the no action letter. But this is going to come down severe on people who try and use this to say they can be a sell a token, and they're going to get killed trying to copy when the auditing of the books and records turn up for what the actual token sale was used for. If these guys are an honest group of people, I have no idea. I don't know this lawyer. I don't know anybody involved in this. But, don't break your promise to the government when you get your no action letter.
Yeah, no, that was very well said, David. And the thing is, when I was reading this, right, because I was like frantically trying to find all of the stories from the last like 6 weeks and trying to review them. So I was reading this part, right, like a response to Turnkey Jet. And I didn't know what they were. Like, I didn't know this company was actually issuing something that's useful to them and not an ICO. So my first initial reaction was, oh, this is an ICO, and this is what the SEC is telling them they have to do. And after I read this thing, and I'm like, wow, this is the most useless ICO in history. They're not going to make any money on this, because why are they going to even do it? But now I see that they were never interested in an ICO. They just wanted a functional token for the purposes that you just described, Bill.
Yeah. I mean, I don't know if you know the company NetJet, but NetJet operates for the last couple of years. They operate, and they called it a token. If you paid them the $15,000, you got one token. And in order to book a flight, you just use your token number to reserve a seat on the plane. It's the same exact thing. There's no difference. And just to be clear, NetJets, I think, is either bankrupt or heading towards bankruptcy and stop flying, because it turns out private jet seats and using tokens didn't increase the amount of people available to buy the token or use the private jets at cost.
Yeah. But yeah, and the thing here is, I'm sure that like even one of these provisions, right? Like, I know I'm anti all ICO, and I read this whole thing with Turnkey Jet. And the thing is, even if this token was being sold on one of these, no KYC markets, to me, that's only an issue if Turnkey Jet is kind of like, like, for example, if Turnkey Jet was still treating each token as $1 to buy their seats, and they have the ability to issue as many of these tokens as they like, which they clearly should be able to do in this case. They can issue as many of them as they like. There's no restriction. They're not saying like these silly ICOs will only have 5 million tokens and there's nothing governing this, right? So these guys can clearly print as many TKJs as they like. And even if they get traded somewhat speculatively on the open market, I wouldn't have that much of a problem with it as long as they're not actually honoring that speculation. But
Well,
then
that's
they
I
still
need to
want
make
to
a correction. DJ Neuro was right about something in the comments. Not NetJets, JetSmarter. Two different companies. It's so I want to give props to the guy who called me out for using the wrong name. It's JetSmarter where you get a token and you get to fly, and it's like $15,000 a year gets you one token, 40,000 gets you two tokens. So
I remember JetSmarter. I've Googled them. Someone pitched it to me at one of these one of the events I was at.
yeah, so I just want to be clear. It was not NetJet, it's JetSmarter. We got a very intelligent audience out there today.
Well, one of the
good job, guys.
that Tone was saying, for example, like trading these aftermarket, that was one of the limitations that Turnkey put in their letter to the SEC. Is they said, look, we're the only people that can buy and trade these are people who sign the terms and conditions with us that it will stay within our limited ecosystem. There's no way they'll be traded on the aftermarket. So again, these limitations were all baked in so that the SEC could look at it and check off each element of the Howey test and say it doesn't apply. Like you said, Curry, whoever you are, great job. You got the first one passed. He doesn't even have, the sad thing is he doesn't even have his name, address, or website or anything on his letterhead. Like he knew that was, I wish he would have known that someday this would show up on the internet somewhere. Poor guy.
I'm prepared to do his marketing for him and, teach him how to do this.
All right, let's stick with a couple of other security stuff. Oh man, so the block stack is trying to do the same thing, but they're gonna. I'm expecting them to fail miserably because this is clearly a speculative token with all kinds of violations of the Howey test. Did you guys read this this letter? So
Blockstack is actually basically submitting itself to the jurisdiction of the SEC. What they did is they went to the SEC and said, all right, we want to do a sale of tokens. We admit that it's a sale of securities. And so they filed a registration statement with the SEC under, I believe it was Reg A+.
Yeah.
I'm not going to go into the details of what that is because it's boring. But basically it was saying, yes, that we agree this is a securities offering. They submitted their form to the SEC that had a description of all the risk factors. It had a description of, the contours of the offering, the contours of the business model. And in this letter, we have the SEC had apparently come back to Blockstack and said, well, wait a minute, you made some claims in your letter, in your filing, and we want to make sure that you have a basis to support them. So if you go to the top of this letter, it's talking about those things in bullet points, right? Those were in the registration statement that were submitted to the SEC. And the SEC came back and said, well, wait a minute, you said the miners aren't broker dealers. What did you mean by that? Neither you or your miners need to register as transfer agents. What do you mean by that? What's your legal support for that? So this is Wilson Sonsini, which is probably the preeminent technology law firms in the world. And they're coming back and making these claims and support for the claims they made in their registration statement. What I think is really interesting about this is what the SEC was curious about. So the questions the SEC came back to Wilson Sonsini were really fascinating and things, frankly, that I'd never thought about. So, for example, what is a miner a broker dealer because they're receiving mining rewards for affecting transactions of securities on the blockchain? That's an interesting question. I mean, I think it's a clear no. But what I like about this is that it shows some of the thought processes of the SEC. And another interesting thing for me was this whole issue of a transfer agent and clearing agent. And this may go a little bit into the weeds that nobody wants to go into. But right now we're, the hot topic is STOs, right? Security token offerings, where we're basically taking stock, bond, whatever it is that would qualify as a security, and we're tokenizing it. So
yeah, and then we're putting it on top of an unstable, potentially illegal security called Ethereum.
Yeah, potentially. I think Blockstack is going to be built on top of the Bitcoin blockchain. So that's
no. It sounds like they have their own blockchain, which is what I have a problem with. Like, I have to read more about Blockstack. I'm not too familiar with them. I don't want to say the wrong thing and have all the Blockstack people on my ass like every other token, but I think they're not related to Bitcoin at all. I think they're just building their own blockchain, or they wouldn't need their own miners mining their coin. Like that just doesn't make sense to me.
Yeah, I want to put a big asterisk that I don't really know what the hell I'm talking about when it comes to this project either, right? But I mean, it raises some interesting questions because, think about the type of infrastructure that you need to have to trade securities, right? So, for example, on Bitcoin, on the Bitcoin blockchain, if I send somebody a Bitcoin, it's an immutable transaction. But when you're dealing with if you're dealing with equities or you're dealing with securities, I think there needs to be features of the blockchains that make them not immutable, right? What happens if I send my stock in Apple, for example, to the wrong address when I'm trying to do a transaction in the shares of my stock? Those shares don't go away just because they were sent to a dead address. So we need to have, some of the features that are very helpful for a cryptocurrency and a medium of exchange are can be not useful or even injurious in the context of securities transactions. So this is a real, this whole filing for Blockstack is fascinating to me because it really picks apart the infrastructure that is necessary to support an STO and the aftermarket trading of an STO, or for some of the clients that I work with, and if I own a company, what kind of duties do I have to my shareholders when I put my shares on a blockchain? And you can't just have these immutable transactions like you do with Bitcoin. So the different features need to be thought of and incorporated into these projects. And I don't think Blockstack necessarily did that. I was reading some of their responses from Wilson Sonsini, and I go, man, I don't know if that really works practically. But again, big asterisk. I don't know what the hell this project is really about.
Yeah, no, I mean, like I looked over their about page. I did that yesterday, and I didn't see any mention of Bitcoin whatsoever. None. And full stack decentralized computing network that enables a new generation of applications where developers and users can interact fairly and securely. I mean, this sounds like another Ethereum to me. Like there's nothing here about merge mining with Bitcoin or side chains like Rootstock is trying to do. I didn't see anything here. Like, again, I could be wrong. And this company has pivoted God knows how many times. They started out with like identity on the blockchain. It was, I already forgot the name of it. I mean, I've met Munib before. I actually like the guy. So it's unfortunate that they're going in this direction. I know other people that work there or have worked there. Ken Lau, if it's the same Ken Lau from like 2014, know him as well. And yeah, it's the whole project is just like the company's pivoted a couple of times. And eventually what happens in the crypto space when you can't make any money because it's so hard to make money, you eventually devolve into creating an ICO or creating or spinning off a, what do you call it, an airdrop of Bitcoin, or creating your own, money. Like that's eventually all of them devolve to that. And they start just making their white papers as complicated as possible. which, by the way, was a recent warning of the SEC, but this is nothing new, right? It was just basically warning you against scams. I forgot which article that is. Is it? It's one of these things.
Just on. It was the joint
Yeah, I think
the SEC article.
Yeah, and I think it's this site here, right? So it's like, hey, before you invest, are they offering you zero risk investment? Are they offering you crazy returns? Are they unlicensed sellers? Does the deal sound too good to be true? But like the one that I really like the most is the complicated jargon and language that is difficult to understand, which is like 99.9% of every white paper I have ever freaking seen. Except Bitcoins. That's the only one that's actually readable and understandable.
Tone, did you see the stats that came out last week? I think the Block ran it and Decrypt ran it, of how like 90% of all these white papers were written by independent contractors that had no ties to the actual companies.
Of course.
It's so true.
Of course. So yeah, so anyway, so all these projects have after that. All right, do we want to say a couple of other words on this whole block stack thing, or do we wait for the SEC to reply to this insanity?
I'm gonna pass. I know nothing about it.
Okay. Hey, one more in the SEC regulation category. So I didn't have time to read into this case. Pally mentioned it, but this is which case is the ATB coin opinion. I didn't have time to read in the decision. Please tell me one of you guys is somewhat up to date on the ATB coin.
I can tell you it was so this is my co-counsel in the BitConnect case, Levi and Korinsky. It's a big win for them. They got a really good decision that says that almost any of these ICO cases are going to move forward to trial. Winning a motion to dismiss doesn't mean you're going to win the case, but it just means that all discovery is going to happen, and that anyone who participated in an ICO, more likely than not, you're going to survive a motion to dismiss. I think we're 2 for 2 on the big cases with rulings so far between Tezos and ATB, surviving motions to dismiss. I think it's a good thing.
So basically, the centralized ICO creators try to dismiss the case out of court, and they fail.
Exactly. So it's not a vindication, but it's just a good sign that I think I have a new hashtag on Twitter. Litigation is the new blockchain transparency.
Well, yeah, this is, if we talk about, we've had really two survivals of motions to dismiss in the ICO context, alleging an unregistered offer and sale of securities under the securities laws. One was Tezos, and one was this one here, the ATB coin. Tezos was an interesting, I think the defendants had a different tack on that because they didn't come out and say, this is not a security. They alleged all of these different arguments, like you need to go to Switzerland and you need to, this isn't a good forum it's not a convenient forum for the litigation. And the judge in Tezos didn't address the issue of whether or not it was a security, because I think the defense counsel was smart enough to know that you don't want to tee that up in a motion to dismiss and sort of put the court into an analytical box to say, no, this looks like a security. Here in the ATB coin case, defendants, I think, made a really poor strategic decision, is to tee that issue up to the judge and say, this doesn't look like a security and you need to dismiss it at the beginning of the lawsuit because it clearly doesn't meet the definition of a security. And that kind of blew up in their face. Obviously, it's a survival of a motion to dismiss, but the language that the court used was pretty clear and said a motion to dismiss has its own standards and it really doesn't, bind the court to anything. But it made the court look at the issue. And because these ICO cases tend to turn on public information, not information that you would necessarily need in discovery. So the court can look at basically everything that's out there and say, does this look like a security or not? And on the context of a motion to dismiss, in the ATB case, the court said, yeah, this looks like a securities offering. So now the genius defense counsel in this case kind of boxed his client in. And, you know, but it is what it is.
So this is kind of good, right? So when this is all said and done, it's possible that ATB coin could bring down Ripple.
That's the problem. That's the problem of litigation right there. Sometimes bad lawyers make good case law, and sometimes good lawyers make bad case law. But I can tell you right now, the day this decision came out, I filed it separately under judicial notice in 3 other cases, including BitConnect, because it was a good decision for plaintiffs' lawyers doing this kind of work. That, you know, it's whether or not it was whether we can make fun of the lawyers all we want. There was some good case law created for a lot of people, but the BitConnect was the first one we filed in. We filed this decision to show that a motion to dismiss is inappropriate. Because the only standard in the motion to dismiss is you have to take everything that's said in the complaint is true. Nothing else. You cannot refute a fact in the complaint. And sometimes defense lawyers go overboard on these motions to dismiss because they're good billable hour motions to file. It's a waste of time 95% of the time. But here, I think Bill really nailed that. Sometimes you don't make an argument when you don't need to. Here, they made an argument and it bit them in the ass, and it's going to come back to help a lot of people like me and my clients. I thoroughly appreciated my co-counsel doing it, and I hope they win that case. And more importantly, I hope we win BitConnect together.
Yeah, well, this amazing coin went from $1.50 all the way down to under a penny. So good luck to them. And probably the reason why their lawyer did that is because that was the best lawyer they could afford.
Who pull up the motion to dismiss? Who's the counsel on it?
It says Reitler, Calais, and Rosenblatt. They're in New York. Never.
Beautiful. You know, I'll bet you Perkins or Cooley was like, "Oh my God, we're going to step in." I'm surprised they didn't file an amicus brief, in support of.
There you go. There you go.
Yeah, never heard. That doesn't mean anything that I haven't heard of them, but God bless.
Well, at the end of the day, though, this is a foregone conclusion, right? Everybody knows the ICOs were securities offerings, and the way that these, if I'm defending these cases, the way that you try to deflect from that is you come up with all these other issues that might preclude liability, but don't, run headlong into the brick wall, because that's what the defendants did in this case.
Oh my God, Bill, you are so wrong. Let me tell you what the right answer is. Don't defend the case. Pay David Silver his money.
All right. Do we even want to talk about? Coin Center is just like, man. I don't get this from Peter. He knows these are security contracts, right? Like the first time I heard Peter Van Valkenburg speak on a panel, he was literally talking about the Howey test and explaining it and how it applies to all of these ICOs. And then the next time I hear him speak, he's on the other side of the whole thing. Like, I don't get it, right? So here's a tweet. If your token fits the definition of digital token, it is not a security. But like, do we even have a definition of a digital token? And I don't think we do.
Well, I think if you scroll up on this, I'm assuming they're talking about either the Wyoming law, just given the fact that it's Caitlin, and the token taxonomy. Look, he's a lobbyist. He's not a lawyer anymore. He's a paid shill for, Kraken and the people who are paying and funding Coin Center, who, full disclosure, blocks me because apparently I'm a bad person calling them lobbyists and saying they're just paid shills. That, by definition, is what a lobbyist is. I used to work for the world's largest lobbying law firm. We were paid shills. They are representing a position they are paid to represent. So I'm not surprised that, I think they were a little taken back by the Token Taxonomy Act. They weren't in full support. Ironically, I'm not particularly in full support either. But, over time, they thought they were going to be moving these things through the legislature. Coin Center is obviously a big supporter of what's going on in Wyoming and the way the Wyoming litigation's written. I'm not surprised that they're not as happy with how the federal regulation was written. Just to be clear, there is no federal regulation. This was just a bill that was submitted in committee. I doubt it's going anywhere. Again, it's going to be a long time before any of this actually gets adopted. So we're just watching. It's the beginning part of the sausage being made. It ain't ready to throw on the grill and they eat just yet.
And he's also a member of the Zcash Foundation, which is, again, a centralized entity that I think is in violation of all kinds of security laws by creating Zcash.
Yeah. Look, Peter Zuko. And, I admit, just for, again, because I tell people all the time, when a creator interacts with me and I like him, I'll kick in and buy some of the, the crypto. So Zuko and I had like a little spat on Twitter one day. It was like the week that Zcash went onto Coinbase or announced they were going on to Coinbase. So I bought like, I don't know, $1,000 or $2,000 worth. I think at the absolute peak of Zcash.
So why don't you sue Zcash and be your own attorney?
Exactly. I think this is one of these where when people say, should they follow my investment advice? No, I have no idea what to invest in. That's points. If I only listened to Tone and kept everything in Bitcoin that I have a lot more money today. But we'll see how it goes. But look, I think you have to remember when you're looking at Coin Center, you're looking at lobbyists, and lobbyists are articulating a position that they are paid to articulate. He's not articulating a position that's best for people in the space.
Well, and there's something else too. And this is specific to the Token Taxonomy Act that I have a real problem with, is that it's trying to make its definition of, and I don't remember exactly what the taxonomy is for the digital tokens, but it exempts them from the applications of the securities laws, and it does so retroactively. It does so going back to 2017. And so what I have a real problem with is that the ICO founders who raised billions of dollars collectively from investors have lobbied the federal government to to exempt themselves from any obligation to give the money back. I mean, if I had to summarize what that retroactive application is it's a get out of jail free card for everybody who did an illegal ICO, and it makes them unaccountable to their investors. And that's a real problem. I don't think that you should be able to take investor money and use that investor money against the investors so that they don't have any rights against you. That's a very problematic thing in my book.
So Tone, I got to wrap up.
Actually,
I wanted to get you for something else. Hey,
I got 2 minutes. I got to be somewhere at 4 o'clock. So while you're looking for the next thing,
I need your comments on the fake Toshi situation and what happened with HODLNUT and what happened with Peter McCormick, and Peter McCormick publishing his reply letter, this one. So give us some take on that.
Okay, so we're going to start with the whole fake Satoshi and the lawsuits. I think Calvin Ayers is going to be one of these guys who publishes something in like 6 months or a year from now. I was taken by a fraud. I believed everything Craig Wright said. I'm sorry, I was wrong. I think what Peter did was smart. Look, he's a marketing genius. How many extra followers, sponsors, and different things did he pick up for building a bigger brand by being the one who took this fight out and took this fight on? I agree. I forget. I think Craig offered, and I'm forgetting whether it was in the settlement letter or what, but he offered himself like $100,000 in apology. And I thought Peter was great when they came back and said, "I'll give you $150,000, or if it was $200, I'll give you $250,000 if you just sign the Genesis block or you send me a coin off the Genesis block." And I mean, everyone. Look, I'm pretty sure the article that came out a couple of years ago when he claimed to be Satoshi for the first time and then reneged they said he originally said he was going to do something off the Genesis block. I don't anticipate him doing it. There's a reason he didn't bring the lawsuit in the US besides the fact that neither of them live there. But at the end of the day, look, I don't believe Craig Wright is Satoshi. I do believe that Craig Wright was in Bitcoin early. He may not be Satoshi, but he's certainly patient 1 or patient 2. And there should be recognition, if he wasn't so egotistical, about recognizing the benefit of the crypto sphere before almost anyone else. And he's made a shitload of money doing that. And it's mind-boggling to me that he just can't enjoy his moment, because he should be reveling in his moment. Instead, he's being a dumbass and he's trying to claim something he's not. And nobody would have cared that he wasn't Satoshi. He simply could have been the guy who says, I've been here from the beginning. Here's a better product. And I'm not suggesting BSV is a better product, but he simply could have done that and he would have been better off.
1 second, guys. I got someone at the door.
Room service.
So, Bill, all you.
Yeah, I mean, it's just a big shit show. I sit back with my popcorn and watch the whole thing transpire. I think at the end of the day, you know, we're trying to take, we all are vested in this space. You know, I sue people, but I also help projects get off the ground. And I think everybody in this space is invested in the legitimacy of crypto as a use case and as an asset class. And these types of shenanigans just really don't help. And I think it's a sad distraction from people that are really trying to do real things and further the space. And it's unfortunate.
I think Bill has a very positive outlook on what most people are doing. I agree with everything he said, except when he used the word most in there. I got to run. I got to be somewhere in 10 minutes. That's 12 minutes away. Tone, I will buy anyone who's listening send them a 21-year-old bottle of scotch if they can identify who owns Trade Ogre, if those people live in the U.S.
I don't know what that is.
Exactly. Anyone listening, though, if you know what Trade Ogre is and you can find someone who lives in the U.S. that owns it, 21-year-old bottle of scotch to you, to the first one who sends me that info.
All right. You guys heard him.
I'm going to go drink myself a glass of 21-year-old scotch. See you guys next time.
All right, man. Later, David. Thanks for joining.
I have
I
have to sign off as well.
You have to sign off as well. All right. Well, we've got through one topic. We have about 3 more, so we'll have to pick this up again next time. Just to let our viewers know what the other topics were, we're going to talk about all of the money laundering laws that came down and the local Bitcoiners that got arrested and where that's going. We're going to talk about the 2 bills, crypto-related, trying to get through Congress. One of them was very, very weird. And we're going to talk about Lisa Chang and VanBax having all of their stuff, the government going after them. I mean, the stories have been nonstop. And I was going to potentially bring up my TokenPay situation, and but that was it. And there was like just lots of other stuff. But yeah, there's just so much to cover in the legal space. But at least we got some good discussions going over the SEC. All right, Bill, final words.
Everybody have a great day. I'm starving. It's been a good time as always. Tone, let's do this more frequently than we do because there's a lot going on, and I think everybody in the community deserves to get the analysis on these issues because it's important. Everybody wants to assume that the law doesn't apply and that crypto is in a extra legal environment, but it's just not. And we all need to know the rules of the road so that we can know how to stay out of crypto jail and not get into any accidents.
Yeah, I'm with you there. Hey, Bill, thanks again for joining us. Bill, over from Rustus Law Firm out in California. And of course, everyone knows David Silver out down there in Miami. And hey, thanks guys for joining. I was hoping we'd have a few more on, but we'll have to do this sooner than later to finish up these stories. Bye guys. See you on the next one.